When it comes to retirement planning, there are three kinds of people. The guy who doesn't think about or plan for retirement, you don't want to be that guy. The gambler type who feels the only way to grow her money is to risk losing it all in the stock market, and the play it safe type who shudders at the thought of losing a single penny of his savings, even if it means sacrificing any opportunity for that money to grow. For years, retirement planning has been vastly limited to choices that fall on one side of the scale or the other. And so, money-savvy people tend to invest in 2, 3, 14, 50 different products in an attempt to balance the scale. But what if there was a way to capture the upside potential of a risky product and the downside protection of a secure product all in one solution? Well, hold on to your potatoes. Let's talk about IUL. Indexed Universal Life can harness the best parts of both sides of the financial seesaw. IUL is a form of permanent life insurance that, whoa, hang on. Life insurance has changed in the last 20 years. You know it as something that just pays out when you die. But these days, life insurance can actually be one of the most powerful wealth accumulating vehicles on the market. One huge benefit of IUL is the ability to harness the power of compound interest to potentially generate large amounts of non-taxable cash value within the policy. This cash value can be accessed later in life to fund a happy, healthy, non-taxable retirement. Your IUL's performance directly reflects the performance of the stock market index while implementing a 0% floor and a market cap, usually around 10%. So your cash value participates in the growth of the market up to the cap and sits safely on the sidelines when the market goes down. You forego some of the upside to alleviate all of the downside. So zero is your hero. With IUL, you won't spend a single day of your accrual making up for losses. Pretty cool, right? Well, it gets better. When designed properly, IUL can serve as a retirement vehicle based on a financial chassis of life insurance protection. And because of IRS tax code exemptions for life insurance, your cash value can create a tax-advantaged way to generate more income in retirement. That's something your 401k or IRA simply can't offer. So what might an IUL look like for you? Let's talk specifics. Larry here is in decent health, a non-smoker, and contributes $500 a month to his IUL starting at age 35. This contribution is conservatively projected to generate $500,000 of cash value by the time Larry retires at age 65. If he chooses to, Larry can turn on a non-taxable income stream from his IUL, giving him $60,000 of income per year to supplement his retirement. And the longer he waits to access this money, the larger it can grow. That death benefit is even accessible when Larry's still living if he suffers a critical, chronic, or terminal illness. So if Larry gets sick, he's covered. If he dies unexpectedly, his family is covered. And if neither of those things happen, the money Larry's paid into his IUL over the years can fund a happy, healthy, tax-advantaged retirement. Assuming Larry lives to age 90, he will have contributed a total of $186,000 into his IUL, drawn out $1.5 million in non-taxable retirement income, and still leave behind a very sizable tax-free death benefit for his heirs.